evening. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Wednesday. And we're sitting here now at the 8th of January, 2025. And the time, getting on about 6:20 p.m. Central Time, 6:15 right in there. So tomorrow we have an abbreviated trading day. Some of the markets close 8:30 in the morning. Some of the markets close at noon. It's all in observance of President Carter, who passed away just recently, and it's the National Observance Day. The markets will reopen, most of them at 5 p.m. Central Time, and do their normal evening type of trade rotation. So we'll see where that's all going to carry us. What else do we have going on? Well, we have a lot of news hitting this market. So maybe we go there first. Challenger Group's going to release their December planned job cuts data at 6:30 in the morning. We have Fed president speaking, so while there's observance going on, the Fed boys are talking. Harker's going to speak Thursday morning to a New Jersey group. Kansas City Fed President Schmidt will be Thursday afternoon at the Kansas City Economic Club. Richmond Fed President Barkin, he's going to deliver Thursday to the Virginia Financial Forecasting Group event. Now, another event that just happened is President Biden's about to roll out tiers as to who gets U.S. chips, what type, so on, so forth. Why? Okay, I asked this why because he's in his waning days of the presidency. Why not leave that to President Trump? Why is he taking to these last things such as you can't drill off the coast, you can't do this, you can't do that? I don't get it, other than he's putting up hurdles. Most presidents wouldn't do that. They would just do things where they leave the office smoothly, but he doesn't want to be smooth about it. He's probably got a chip on his shoulder that he didn't run. And I really believe he thinks he could have beaten Trump. But I don't know what this all means, nor does anyone else. What I do know is that the marketplace is under pressure because here we are, we're 12 days away from the inauguration. All we keep hearing from President-elect Trump is, I'm taking the tariffs, I'm hitting this, I'm hitting that. Is that reality or not? And that becomes the big problem. What's it going to do to inflation? Will he go through with it on Mexico, China, 10% to China, 25% Mexico and Canada? I don't know. I can tell you that I don't believe for a second that we're going to see the Fed do anything in January at the upcoming Fed meeting. I think they'll sit tight and they'll say again, they've got to watch the data where it's at. They'll say the labor market has been strong, which it has, but we get a jobless report coming out this Friday, so that could be an eye-opener, or it could confirm the strength of the job market just as it's been. If you saw the unemployment claims today, they keep dropping, not going up, they keep dropping. We're going to see, and we just saw the JOLTS report, and that went up to 8 million jobs being offered out there, not fewer, but more. That's not a sign of weakness in the job market. So just keep your eyes on all that. The sticky part's been the inflation, and that's going to worry the markets a lot, and it has, because how do you beat it? Well, I want to say this here, and I'll cover it in my financial area. You don't have to beat it, the Fed. The market's doing it for you. That's the reason we're seeing so many interest rates now approaching 5%. The market's doing your job. Just sit tight. All right. When we take a look at gold, you can see the market is staying over the 18-week average of closes. So for better or worse, the trend is up, the bias is up at this point. Here we are with the market trying to climb, and here's why the trend is up. The swing line has got higher lows, higher highs. I think you'd agree with that. Number two, the market is over the 18 and now the 100-day average. To get really bullish, this is what you want to see. You want to see, in my opinion, the 18-day swing around and get back over the 100-day average. That could set the market up to these levels. What would do that? Fear of inflation. That's the only thing I can think right now that would do it, and or an unknown world event. Trump comes into office and all of a sudden China reacts in a different way and suddenly our warships are at each other. I don't know what the event is. I'm making this up because there's something unknown that could happen with all this. So that's another thing that could go. Where could the market go? As I told you, I don't think it's going very far on this run. I expect the upper Bollinger Band to act as a brake on wherever it does. I said I thought this would fall, and it's coming in from the current quote where you're at right now, $12 higher. You run right into that number. What's the magic of the number? It normally stops the market, but it stops it in a good way when you're going sideways. So let's see if that's going to be the case. In addition, you're overbought. So in order to get this market roaring, you've got to latch onto the Bollinger Band and with price, push it back to the upside. What's going to do it? That's my problem. I don't see anything to do it. When we come to the gold-silver ratio, I forgot to change this again. It should be a silver color because you're under the 18-day average, the difference. When we come to the silver market, I've gone on record telling you that while I expected a rally because the swing line turned up and prices got over the 18-day average, I thought the 100-day would prove to be a problem. An even bigger number would be, actually that's the 200-day average, and even bigger would be the green, the 100-day average, as it ties into the Bollinger Band, plus you're overbought. Haven't changed my opinion. In the copper market, we're seeing China make moves to have consumers do things they haven't done. We have what we call just think our capital goods, all right? Our large durable goods, products like a dishwasher, a refrigerator, items like that, all right? Take a bit more of your capital, we call them durable goods, they last longer. Well, China's decided to follow the US on that, but instead of doing it in a way that I think makes sense, they've expanded, and now you can get a dishwasher with a tax rebate. Now, I'm not talking a sales tax. They'll give you a tax rebate, trade in your old one, buy a new one. You're making China great by buying new products, blah, blah, blah. It's even down to supposedly toasters. I mean, that's pretty crazy. The idea is to give the consumer more confidence there to buy. If they buy more, copper will be more in demand. But what I think kicked copper up today has nothing to do with that. Chile came out today and denied a large miner another permit, and that's less copper. At the same time, Codelco came out and they hit their goals and exceeded production of last year from the year before, and I think that has helped. But what the market is probably doing, and I want to plant this in your ear for this, China said that by March we're going to get their programs of what they did. Remember, they had the People's Congress and everything at the end of the year. They go into secluded meetings. We've been hearing little things and little parts coming out. They allowed the yuan to break through the 7.2 to $1, go up to the 7.3. They're allowing and supposedly going to allow new sales of bonds for the local governments to be able to pay for things. It's not what's going to do the job. What's going to do the job is they got to do something real big to make people want to buy the big item, property again. That's the driving force that they need in local economies, local cities to make things happen again, because that brings in the tax revenue. Buying a car, nice. Let's assume you get taxed and the government gives you back some form of a rebate. It's not the same as the property buy. That's my opinion of it, and that would give their stock market a boost. Do I see it happening? I haven't seen it yet, so we'll see. Platinum is following copper. If you took the name off both charts, which one's which? I mean, it's pretty strange. Tell me. They look, to me, very close to identical. And you're back into the resistance here, and the dollar stays strong. The dollar wins off strong labor for the moment, very strong. We've seen those numbers. Could it weaken off of Friday's jobs report? It could, but I'm not seeing what would do that. You'd have to have the first of a report that really shows a crack. Then why aren't we seeing it unemployment or the JOLTS numbers? The unemployment claims, it's not making sense to me. So I think it stays up. It is overbought. We'll see what the market wants to do. Volume is mixed because a lot of traders realize tomorrow is one of these abbreviated sessions, but that's in the US. The world won't recognize that. For those of you starting off the year and use TradingView, I don't know if you're aware of it, but all of the indicators I use, my version of slow stochastics, swing lines, I mark out outside days for you, the window envelopes that I like to use on charts, moving averages that I like to use, which are different. we put our suite together for you, and you go to our website at iraepstein.com and go to customer services. On the very top right, you'll see it. Give that a click. Right in there, you'll see trading view indicators. Go in there. That's where you sign up for everything. We'll get an email that tells us that you've signed up. We will turn it on. We'll send you an email, turn off your trading view, log back in. Everything will be there for you. It really works that way. It only takes up 2 slots. Trading view, people know what that means. Go to iraepstein.com, as I said. Go to the customer section at the very top right, or follow the link that you'll see at the top of this page, and we'll take care of it for you that way. I'm Ira. You have yourself a great day. I'll catch up with you in the morning.